Hello and welcome to Crux Investor. We caught up with Bruce McLeod from Sabina Gold and Silver today to hear his story. They're nearing a construction decision. So if you want our thoughts and opinions on that conversation, what they're up to, and of course the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, the summaries from experts from around the world on a variety of commodities and companies. There are training videos on there and summaries of other interviews that we've done just to save you a little bit of time. And of course, there's our thriving community of investors sharing their thoughts on ideas with each other in a nice, safe environment. And you should go along there now and join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Bruce, how you doing, sir?
I'm doing very well. Thanks.
Good to have you on. It's been a while. Busy year for you boys.
Look, it's been a year where we've had to be pretty adaptive and make some changes given the circumstances. But I think, I'm pretty proud of the team that we have, that we've been able to keep forward momentum going.
Do you think COVID means that companies are having to work harder? CEOs like you are having to work harder?
We have to work differently. As most CEOs of junior companies that rely on the equity capital markets, traditionally we've had to spend a lot of time on the road, meeting funds, meeting investors, and we've been able to adapt and do it like we're doing right now on a Zoom call or Teams. And there's another 5 platforms, Blue Jeans, that I wasn't even familiar with the name of in November of last year. That I think in a lot of ways we're working more efficiently. But what the real challenge is the collaborative part of the business, where you've got 5 people sitting in a room, working on solving a problem. Those sort of things are, I think, the most difficult ones that we've had to adapt through and work through. And frankly, we kind of miss and just the interaction of people one-on-one, rather than, I've got to say that the tedium of working remotely. It's all been adaptive, and believe me, I think we're all waiting for this to end.
Amen. Well, the reason I ask that is because, so we should get in and talk about the company in a second, but the reason I ask that, I sometimes say with junior companies like you're getting up there, 850 million market cap, right? That CEOs would disappear on the road. By that, I mean, they were going to client meetings abroad. They were going to a 2-day conference or whatever, but they would take 5 days to do it. And that means that they probably, they weren't around, to do the work, which I want them to be doing with my money.
Well, look, I've got to say, as someone who had a pretty aggressive travel schedule for the last 5 years, is the best part about COVID is I don't have an aggressive travel schedule. I'm spending more time with my family. I think, to be honest, I'm working longer hours. But it's more, there's a lot of things that are more efficient, some that aren't. And again, that collaborative part of it, most being the biggest one. But I think this has changed how we're doing business going forward. But back to your question is going to the UK and going on a red eye and being fresh to be able to do meetings, and then coming home and then back in the saddle on the next day. Those are. I'm kind of glad that those are going to be less frequently going forward.
Well, I hope so. Because I think for some companies, smaller than you, with less capital than you, need to perhaps start thinking like that for sure. Anyway, let's get into talking about the company. So first of all, why don't you kick off with that compulsory 1-minute overview of the business, then I'll pick it up from there.
Sabina is a gold explorer who has transitioned now to a developer. 2 assets, one being our active asset, which is the Back River Gold District. And we've been advancing that. It's an 80-kilometer long banded iron formation, gold hosted property complex, and total resources of a little over 5.2 million ounces at 6 grams in measured and indicated, another 2 million ounces of inferred within that belt. We've advanced those through feasibility. We're now fully permitted. And with additional exploration over the last several years and a lot of success, we are now on the cusp of releasing new resources, new reserves, and a new feasibility that will showcase that the property is getting bigger and getting better. In addition, We have the passive asset, which is a royalty on the Hackett polymetallic silver deposit, which again is in southwestern Nunavut.
Right. Talk to me about this year, Bruce, because like you're at that stage where you're at construction contract review stage. So the boring bit is over for the market. You're at the point where you're going to actually start, you're preparing ground as it stands. But where are you with, let's start with that contract review.
Well, back to where are we is everybody likes to talk about the Lassonde curve and that down period and permitting the rest. Well, we're now in that part that starts poking its head up and actually can be very creative. So we are in the midst also of detailed engineering. So you've got a feasibility for a lay person. That's a concept. You've got basic engineering, which is an artist's rendering. And they got detailed engineering, which is actually your IFC or issued for construction drawings and your blueprints. So we are moving in parallel with the feasibility, the detailed engineering. The detailed engineering for the full project will come probably about 2 months after the delivery of the feasibility. But we're taking those issued for construction drawings, and from those what they call MTOs, material takeoff quantities, that you're able to do a much better estimate in your feasibility numbers, but also for going forward with a construction contract, rather than somebody estimating quantities, is now they actually have a list of quantities, and what we can do is we can offlay some of that risk now to those constructors that they're not going to have that additional cushion of materials. And believe me, the most challenging part of our project is not the resource, the reserves, the metallurgy. It's infrastructure and logistics and getting things there. So we have to be much tighter on our quantities that we're bringing to site, particularly anything that we can't fly in that we miss, because that could cause an 18-month delay for the wrong key item that we can't deliver other than by sea and by land.
Yeah, I get the military precision component of it, and just maybe talk about Nunavut. It's not just weather and location, right? Location there. I mean, have you had issues around COVID this year? How's that affected things?
Well, Nunavut is until recently has been very. There's been very few cases or no cases until recently in Nunavut. And what's happened is in a lot of the communities, they're smaller, they're isolated. It's 20, 25 below for most of these communities, so people are indoors together, and so we've seen, unfortunately, explosive rates of COVID. Now, one of the things that Nunavut did very early is limit any interaction with those communities. So even though we're in Nunavut, we don't actually interact with those communities at this stage. Some of our employees that would come from those communities, unfortunately, because of those restrictions, are not working on our site. But what we've done is put in a very prescriptive testing procedure that we bring everybody to marshaling points. We actually do full testing on them before they hop on and come on the flights to site, because think of us as one of those northern communities. If we ended up with an outbreak on our site, it would go through camp very quickly. And look, we do not have our permanent camp in, so we are dealing with a little more rustic accommodation and other facilities. It means people are actually closer together. So what we've had to do under COVID is accept some inefficiencies in exchange for working safely, and that is reducing the number of people in our camp. So we've been really at half our traditional capacity, and unfortunately, running a camp of that size is the same, for the overhead cost, whether you've got 50 or 100 people in it. And what it does is actually adds to our unit costs of all our other activities. So it has been difficult. It has been challenging. It's not something that we're going to get away from unscathed. From a safety perspective, we're still on site. We expect to be demobilizing after we finish the preparations in the box cut for going underground, and be out around the 14th, I think, of December is what our final demobilization date is. So again, adaptive. Safety is our priority of our people. and accept some of those higher costs for some of these pre-development activities in order to achieve that.
But the higher costs, what does that actually equate to? Is it significantly higher costs for you, or is it just higher costs for this particular portion of your budget?
For this particular portion, and it is hundreds of thousands of dollars over millions of dollars of budget. So look, it's not insignificant, but we don't generate cash, so every dollar that we spend has to be by issued equity into what we obviously think as a management team is a discount, or taking debt on at a very high rate. And so we have a management culture of spending money like it's our own, and we're on a tight leash.
Yeah, so I mean, you referenced where you are on the Lassonde curve, and I think your share price chart would probably reflect that too. But something that you're not able to control is how long this COVID goes on for, and how it's going to affect your business, and when financing is going to be in place, and what it's going to cost you. So how are you mapping out and planning for 2021? Because after what has been quite a challenging year.
2021, if we are to make a construction decision early in 2021, which with a new feasibility and the balance that we are certainly hoping that is going to happen, is 2021 is actually a relatively light year for construction and on-site operations. It's continuing with the underground ramp. We'll have the site preparation of the plant, process plant, crusher, fuel tank farm, and accommodation complex. Most of the road network between those is largely complete now, and it's procurement. And it's procurement for those first things that have to come in the sea lift in the late summer of 2021. And the bigger risk for everybody right now is global supply chain. So I'm sure that you've been to your local store and there's some favorite thing that you go for, and you've said, where is it? And you go to your shopkeeper and they say, geez, we haven't been able to get it. Well, it's the same with industrial supplies. There's certain things that normally are just on time delivery. You can put your order in 2 weeks ahead, that now you've got to think ahead 6 or 9 months. So that is the bigger risk for any construction project right now. And you've got people, look, with a vaccine on the way, we expect it to be safer. A lot of those issues, but the supply chain is not going to go away. There's been some financial damage done to our system, and that's going to take some time to remedy. Well,
I think most gold companies are praying for that. But we should stick on your company here, because have you got any debt?
No, I'm a good Scotsman. I don't believe in debt until you have an avenue of paying that debt back. So, debt, what we are doing is I think I've already mentioned, we're advancing a new feasibility. It's going to be a larger project. It's going to be more gold on an annual basis and on a life of mine basis. And a lot of that is from some of these higher grade areas that we've successfully explored since our feasibility, and we'll deliver those earlier in the mine plan. And that's certainly going to help the economics of the project. But there's a bunch of other things that we can do to actually deliver this and make it a better project going forward. But we've also been moving our debt process along in parallel. So we've got a fundamentally different project today than we had when we ran the debt process last time. It's going to be a higher capital cost, but if we look at it on a per ounce basis, it's still going to be a much better project in terms of total capital per ounce. So what we're doing is we've gone back to many of those potential debt providers. They're under confidentiality. So as we are completing modules of our feasibility, we hope to be able to deliver them sooner than we can to the public. So when we issue a feasibility, and behind that, we hope that we can have the debt package in place shortly after that.
Right. And any idea of what that's going to cost you? I mean, do you think it's more expensive now than it will be, say, this, in the new year, in Q1, Q2?
Look, it's it's not like 25 bips is going to make a bank or a lender feel better if there's a fundamental flaw in your project. And one of the things that we have to make sure is that those key elements that we need, particularly for the first sea lift, and those that are coming afterwards, that look, have we estimated their delivery times accurately and precisely? Can we receive them? And if we can't receive them, do we have some plans to mitigate, and how could we maybe fly in some of that equipment? So it's really those things that could in fact be binary from a lender's perspective, that we have to make sure that, again, using your word, that there's some military precision in being able to deliver those. And
do you think, I know you've got a bit, how much cash are you sitting on at the moment, actually? That's that.
We're now, I think our last financials in the neighborhood of 60 million Canadian.
About 60 million Canadian. Okay. So I'm interested in how you intend to spend that. I mean, you've got a big resource measured indicator. You've got a big measured indicator and inferred resource. It's big enough to get going. But you're still talking about expansion and infill and any exploration. I'm just trying to wonder, what are the messages you're trying to send to the marketplace about?
Well, I think right now is that we have what I believe is the premier development, gold development project in Canada that isn't owned by a major or mid-tier. In terms of quality ounces, in terms of annual production, is what our goal is to take this from something that is 200,000 ounces and move it to something that is, at or close to 300,000 ounces a year in terms of annual production, particularly in those early years. That is a rare animal in today's gold environment. There hasn't been discoveries. A lot of these assets happen to be, further from first world jurisdictions. And we talked before about the north, about cold. Those things are you can deal with. You can specify equipment that operates in the cold. You've got to accept some downtime when you've got weather delays and extreme cold, and some costs associated with those. But it's the logistics and the infrastructure are things that we have to overcome. And there's a reason that we have taken a lot of extra time to build our port facility, to build and operate our winter ice road, and operate from our consolidation points in Lower Canada, is because those were the questions that lenders were most concerned about. So rather than saying, "Hey, I've got a paper study, don't worry about it, we can do it," we're now in a position that would say, "Hey, we've done it, and here's exactly what we've been able to achieve. Let's use that in a financial model rather than some imaginary worst case that we don't believe would happen."
Right. You've actually touched upon the thing I did want to talk to you about, which is the fact that, this is getting to be the sort of size that a major might be interested in. And with the infrastructure in place, it makes it a much easier conversation. But what I'm trying to understand is the picture that you're trying to paint. Because if you're a geologist, you want to do things the right way and you want to know as much as you can. You've got whatever it is, something 568,000 meters into this thing. You know a lot. But at the same time, you've got to be clear about what your business plan is. Are you trying to pretty yourself up for a major to come in and say, right, you guys take over? Or is this your thing that you're going to mine, you're pouring gold, in which case, how do you spend your 60 million bucks? Do you get into cash flow quickly and then come back to this kind of expansion, exploration component? Because you've got a big land package there. So how are you approaching this?
Well, the strategy that's been developed by our board and with support of the executive is simply, let's affect what we can control. We can't control a premium bid on something that takes a full value of this land package into account. We can't affect that. What we can do is deliver all of the attributes that show where we're going to go. So what do? It's almost like, and I think you said this before with you, it's almost like the rule of Italian driving. Take your rearview mirror off, put your foot on the gas, and go forward and win the race. So we are doing what we can control, and that's deliver a project that we think delivers the most value. And when we talk about additional throughput, additional gold production, it's still on that 3,000 ton a day case that we had in our last feasibility. We are envisioning an expansion in year 5 on this feasibility. But really from initial capital, what the change is, maybe there's some areas where we're a little more realistic looking at the costs because we've done a better job of risk assessment on what can go wrong, and should we put some additional mitigation dollars in there to try and prevent that? Let's get it done right the first time. But going underground early is certainly adds some additional capital. But if we look at even 50,000 additional ounces on an annual basis, that's over $100 million Canadian on an annual basis. And if that's sustainable, if you look at the overall metrics of the project, it'll be a better project. So look, M&A is something that we obviously have we'll call it a contingency plan for, and we're prepared for if it does happen. But that is not our strategy. That is not something we can affect. That's something more that you have to be reactive to be able to deal with. And look, we're open to having those discussions at the appropriate time, but it has to take into account the full value of the asset. And what our job is to deliver to the marketplace what that is, not only conceptually, but in terms of an actual project that can deliver those ounces and produce and do it safely to the environment, to all the stakeholders, to our shareholders.
Okay. So right now you got a lot of cash. I'm looking at the numbers that you're putting out. Seems fantastic. Life's easy, right? No problems.
I'm glad it looks that way to you. Is it easy? No. But I think if we look at our management team, what we can all say is actually fun. We're now into the part that, look, I'm not a geologist, I'm a mining engineer. We're now into the part that gets me excited, and our team also. Now we've got one of the best exploration teams out there. And the amount of success that they've been able to deliver us is unparalleled. If we take a look at V2, which is the new subset on a high grade area just under the pit, we're seeing 3, 4, 5, 600 gram meters intercepts, and within several hundred meters of surface. Those sort of things are what are the difference between a good mine and a great mine. And there's more of those that we are very confident that we're going to be able to deliver.
But do you think the market understands that? Isn't it a case of get on with it, start producing some cash and come back to stand the exploration guys down? They can do a good job, but or do you say, no, actually, we're going to run those in parallel because the exploration bit is cheap? I mean, how do you approach that conundrum?
Well, exploration isn't, as much as people wish it was, artificial intelligence. That you take a data set and it'll tell you where to drill. What it is human intelligence. And you talked before about 568,000 meters of core that's been drilled. Well, really what has happened is all of that money has been what we have put into our team, and that is the human intelligence that we've been able to develop. If we have explorers that aren't exploring, it's like me. What gets me up out of bed every morning is the same for the geological team. They need a project that they can actually go and they can deliver. And look, in the grand scheme of things, our exploration budgets for the most part have averaged about $5 million a year, $850 million market cap. Do you think it's a fairly simple question? Do you think they delivered more than $5 million worth of value a year? I think you could even answer that.
Even like.
No, I don't say that in a bad way, so sorry. But look, I think it's very simple. So if we can continue to add value, and if it wasn't for that exploration, we wouldn't be able to deliver the kind of project that we anticipate delivering in Q1 of next year. That is something that is, again, near that 300,000 or close to that 300,000 ounce a year of production. And we've got a large land package. We're now starting to look at, where else in the package should we focus on once we start development at Goose. It is a dual path, but it's, the big one is project develop, moving us forward to cash flow. The smaller component is continue to add value at the drill bit and exploration. So look, I don't think anybody should be confused that its exploration is not first, it's second. Because at the end of the day, real value isn't going to be delivered until we're pouring gold. And we think that that's going to happen sooner rather than later.
Yeah, you're up 25% on the year from the beginning of the year to now. Okay, I'm not going to count from March, as some CEOs sure. like me too. So that's a great achievement, but you can sort of see why people in the market is asking, when are you going to make that construction decision? How long is that going to take? When are you going to be able to start producing your own cash? Which gives you a whole set of different problems, right? But, fantastic problems. And that's the answer. That's the big question that was sent into us by, literally, hundreds of people going, when do these guys get going? Because they want to know if they come in now or they wait just that little bit longer, because not much is going to move until you've made that construction decision. In which case, when precisely should they be thinking about getting back into this story?
Look, I think the biggest change that we're going to be able to deliver is delivering a better project. And again, that'll be, by mid-quarter one, we expect on new feasibility. That feasibility, all the components of that are already permitted, so it's not something we have to go back for. That will be the basis of a production decision going forward.
Right.
And we've looked at it strategically. Even if we continue to have an exploration success, we don't see the project changing at Goose. A lot of that is going to be tail reserve. What's going to happen on the back end of the mine life. And we felt strongly enough that again, by delivering higher grade, if we can make this a project that can absorb even more risk than our last project, that's what it's going to take to be able to get not only the lenders involved, but the equity market involved and wanting to finance this with a production decision. At the end of the day, we would like nothing better than having a construction decision today. The reality is, until we have that delivered and we can deliver the merits of this new project, the lenders are on standby, and the equity holders are wait and see. So look, we can want to do everything we do, and believe me, that is our desire. But we have to be able to deliver those components, and they have to go through stress testing by the lenders and the rest. And we still have a timeline of early mid 2021 to make that decision.
Okay, fine. Can we talk about your polymetallic project?
Well, Hackett is really a zinc and is the largest component. There's a little bit of copper and lead, and we have a silver royalty on Hackett, and it is 22.5% of the first 190 million ounces of silver that are produced in a royalty form. And by the way, that's effectively the resource. And then as a sweetener to us is 12.5% thereafter. We have no control over the timing of that project. It's owned by Glencore. And if and when they advance that project, it will be a big financial windfall for our shareholders.
But they're not in a rush to do so. They've got their own problems up there.
I think that Glencore has been very clear that they don't think that mining companies should build mines. Look, their DNA, I think everybody recognizes, is they're a trading company more so than a mining company. And but they're also very commercial. And if there is something that is in their portfolio that isn't achieving full potential, I would only assume that there's discussions about how do we maximize value of that asset, and having it sitting on the sidelines in a market that looks certainly much more attractive for zinc. We're looking at zinc deficits now being forecast, and it would be one of the best silver mines, I think, in first world jurisdiction. So I'd be very surprised if there wasn't some discussion internally about how do they generate value for that asset.
Okay, so can you answer me this question, because this is the bit I'm struggling with as an investor looking at your company. You go, really well run, the numbers look fantastic, it looks pretty well valued at the moment. You're going to argue different. Good. And, I'm trying to work out, do I invest in you, or do I look at some of these more highly leveraged plays, the companies are, worth a lot less in terms of market cap, earlier stage, sure, but there seems to be a lot of money to be made elsewhere. Why should we invest in you?
Look, different people go to Las Vegas and play different methodologies. If you want to go to a roulette table and put it all on number 27 and you got 30 to 1 odds, I understand that. Now, you have to understand the risks that, out of 30 different, or 31, depends if there's 1 or 2 zeros on the table, is you're going to lose it all. But, for someone that has a thesis of, look, I want to be involved in the gold equity market, I want to have something that has limited downside, but still has great upside, that, this is playing poker, and knowing what everybody else at the table, and being able to read other people at the table. Your odds are much better. Maybe you're not going to have the 31 to 1, but it's a different investing strategy. Look, when we talk about valuation, I think you're right. Based on our last feasibility, looking at peers, there is we're relatively well valued. I still think if we look historically, companies like ours would trade at close to 0.8 times NAV. We're probably 0.5, 0.6 where we are today. But on what we are going to be delivering, what we anticipate delivering, is something that has much more value. That, again, from the risk element, all we're really doing is bringing in one underground early, and next spring we will be collaring. We've got the equipment on site. We're just wrapping up the box cut, which is a preparation of the face, so we can go underground in the spring. We still believe there's a lot more value to be delivered. And by the way, our largest land package in terms of gold bearing iron formation is actually the George property, which is 50 kilometers away. And we've got about 4 times the iron formation than we do at the Goose property, where we're developing and moving forward. That is likely our second standalone mine in our minds. And we have yet to be able to deliver any value because we haven't been on the ground on that one since before I became CEO of the company 6 years ago. So we have strategies to continue to add beta to this company. And sure, you're not going to wake up one day and see Sabina trading 5 times where it is today, like you can with maybe some of these more binary investment decisions. With that being said, you're not going to wake up one day and it's going to be worth 1/5.
True. Have you got the energy to see this through, get it into production?
Absolutely. This is this is the part that gets that is more exciting for me.
Okay, Bruce, good to catch up, mate.
Wonderful.
Like I say, it's very difficult to have conversations with companies like yourself because it seems to have been run with military precision, and you guys have done a lot. I think you've still got a lot of work to do, but I'm excited to sit on the sidelines and watch how you get on.
Well, thank you for inviting us to talk about Sabina today.